Hey everyone, welcome back to Corporate Dakota, the place where we dissect the secrets buried in company filings, perhaps even finding a few skeletons in the closet. Today we are diving deep into FirstService Corporation's annual report on Form 40F, which is essentially their big yearly financial checkup. Think of it as their report card to the world. Before we get started, if you love getting the real story behind complex financial documents, hit that subscribe button. We also have a fantastic Discord community where we break down these filings even further. It's linked in the description below, so join the conversation. So what is this Form 40F all about? Well, for companies like FirstService Corporation, this is how they tell investors and regulators across the pond basically everything important that happened in their business over the past year. It's like a comprehensive diary for their financial health and operations. This filing confirms that FirstService Corporation is indeed an annual report for the fiscal year, ending the 31st of December 2025. They are reporting under the regulations of the Securities and Exchange Commission, which is the big boss for financial reporting in the United States, even though they are based in Canada. Their main trading instrument are common shares, which you can find on the Nasdaq stock market under the ticker symbol FSV. This tells us they are a publicly traded company with shares available for anyone to buy or sell, and they are subject to the scrutiny of both Canadian and US markets. As of the end of the year, they had just over 45 million common shares outstanding. This is a key number to track because it gives us a baseline for calculating per share metrics like earnings, and it shows how much of the company is available on the open market. The big question for any company is, did they follow all the rules? And for FirstService Corporation, the answer here is a resounding yes. They confirm they have filed all required reports over the past 12 months and have been diligently keeping up with their filing obligations for the last 90 days. This signals a company that is compliant and transparent in its reporting. And in today's digital world, it's not just about filing, it's about filing smart. FirstService Corporation is also confirming they have submitted all their interactive data files electronically for the past year. This means they are embracing modern technology for their financial reporting, making data more accessible and analyzable. They also have to report on their internal controls over financial reporting, meaning how they make sure their financial numbers are accurate and reliable. This is a big deal and requires independent audit. They are confirming that their management has assessed these controls and a registered public accounting firm has also audited them. This is a critical piece of assurance for investors. Now let us talk about the actual documents that make up this report. First up is the annual information form, which is basically a more detailed look into the company business operations and risks. Think of it as the company's autobiography. It is available as Exhibit 1. Then we have the heart of any financial report, the audited annual financial statements. This is where the real numbers live, the income statement, the balance sheet, the cash flow statement, all verified by independent auditors. This is critical for understanding the company's financial performance and health. You can find these in Exhibit 2. Following that is the Management S Discussion and Analysis, or MD&A. This is where the management team explains the financial results in their own words. They talk about what happened, why it happened, and what they expect to happen in the future. It's their chance to tell their side of the story behind the numbers. This is Exhibit 3. The company is also stating that their top executives, the Chief Executive Officer and Chief Financial Officer, have checked and confirmed that their internal systems for making sure all information is disclosed correctly are working well. This is important because it means they have processes in place to prevent surprises and ensure investors have the information they need. The management team takes responsibility for making sure their internal systems for reporting financial information are solid. They are dedicated to ensuring that the financial statements are reliable and prepared according to the accepted accounting principles. This is fundamental for building trust with investors. However, there is a small asterisk here. Management has excluded 9 entities that were acquired during 2025 from their internal control assessment. These acquisitions represent a small portion of the company's total assets and revenues, so it is not a major concern, but it is an important detail for full transparency. They have based their assessment on a widely recognized framework called the Internal Control Integrated Framework. This shows they are using established best practices to evaluate their systems, and they have concluded that their internal controls were effective as of the end of last year. And to top it off, PricewaterhouseCoopers, the big accounting firm, has also given their stamp of approval on the effectiveness of FirstService S internal controls. This independent verification adds another layer of confidence in the company's financial reporting. Good news on the internal control front, there were no significant changes in their internal controls during the year that could have negatively impacted their financial reporting. This suggests stability in their systems, which is always a positive sign. They are also confirming no special notices related to trading restrictions were sent out. This means no unusual situations requiring immediate notification to employees or insiders about trading limitations on company stock. Now let's talk about the people making the big decisions. The company has an audit committee and they have confirmed that at least one member is a financial expert. This is important because a strong audit committee plays a crucial role in overseeing financial reporting and internal controls. Specifically, Ms. Jones-Sproul has been identified as this financial expert and she is considered independent according to NASDAQ S rules. Her background as a former executive vice president of finance at a major health system and her CPA designation means she brings a wealth of financial knowledge to the table. It is important to note that while Ms. Sproul is designated as a financial expert, this designation does not impose any extra legal burdens on her. It is an acknowledgement of her expertise within the context of her role on the audit committee. The company also has a clear set of rules for how everyone should behave. They have a code of ethics and conduct for all employees and a separate financial management code of ethics for senior financial staff. This shows a commitment to ethical business practices across the organization. Let us look at the money paid to their auditors, PricewaterhouseCoopers LLP. For the year ended the 31st of December 2025, they were billed $1.727 million for audit fees. This is a slight decrease from the $1.750 million in 2024. While the decrease is small, it can sometimes indicate increased efficiency or perhaps a slight shift in the scope of the audit work. Audit-related fees, which cover various assurance and related services not necessarily part of the main audit, were $209,000 in 2025. This is a significant jump from $72,000 in 2024. This increase in audit-related services could be due to acquisitions or other projects requiring assurance from the auditors. Tax fees for compliance advice and planning were $80,000 in 2025. This is a notable decrease from $292,000 in 2024. This reduction might suggest that tax complexities have decreased or that the company has brought more tax work in-house. And finally, other fees for things like research tools were minimal at $5,000 in 2024 and $0 in 2025. In total, their auditor received $2.016 million in 2025, down slightly from $2.119 million in 2024. Overall, the auditor fees are in line with a company of this size and are not raising any red flags. On a positive note, FirstService Corporation states clearly that they do not have any off-balance sheet arrangements. This is great news for investors because it means there are no hidden financial obligations or risks lurking outside of their main financial statements. Everything is out in the open. When it comes to their contractual obligations, meaning commitments they have made under contracts, this information is included by reference in the management discussion and analysis. This means you would need to look at Exhibit 3 to get the full picture of their future payment commitments. The members of the audit committee are Jones-Sproul, who we mentioned earlier as the financial expert, Yusri Bisseder, and Elizabeth Carducci. This committee is responsible for overseeing the integrity of the company's financial reporting and internal controls. As a Canadian company listed on NASDAQ, FirstService Corporation is classified as a foreign private issuer. This means they can follow some of their home country's corporate governance rules instead of strictly adhering to all of NASDAQ's requirements. They disclose these differences on their website. On a lighter note, the company has confirmed that it is not involved in mining operations, so there are no mine safety disclosures required. Also, there are no foreign jurisdictions preventing inspections, and they do not have any clawback policies for erroneously awarded compensation to report. This simplifies things for us. Finally, for the paperwork part, the company undertakes to make representatives available to respond to inquiries from the ISI staff and to promptly provide information when requested. This is standard practice and shows their cooperation with regulatory bodies. They have also previously filed a consent to service of process, which essentially designates an agent in the United States to receive legal documents on their behalf. This is a legal requirement for foreign companies operating in the US market. And at the very end, we have the sign-off from the company. With the date being the 20th of February 2026, it is signed by Jeremy Rakusin, the Chief Financial Officer. This confirms the report has been officially submitted. Here is the exhibit index, which lists all the documents that are part of this filing. You can see the annual information form as Exhibit 1, the audited financial statements as Exhibit 2, and the Management S discussion and analysis as Exhibit 3. Also included are certifications from the CEO and CFO confirming the accuracy of the financial reports, which are really important pieces of assurance from the top brass. And of course, the interactive data file is included, which leverages technology to make this financial information more accessible and machine readable. So what is the big picture here for FirstService Corporation? They appear to be a very well managed and compliant company. Their financial reporting is transparent and they are adhering to all the necessary regulations. The slight increase in audit-related fees might warrant a closer look at what those services entailed, especially if they involved acquisitions or new business initiatives, which is a common driver for such expenses. The reduction in tax fees could indicate tax efficiencies or a simpler tax structure, which is generally a good sign. The absence of off-balance sheet arrangements is a strong positive highlighting good financial hygiene. All in all, FirstService Corporation presents itself as a stable and responsible entity in the public market. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.